Good evening, one and all present here. I'm Saranya from SICI. On behalf of SICI, I'm welcoming you all for this evening panel discussion on TDS on benefit or request in respect of business or profession. I request all the speakers for this wonderful session. Now I request Mr. T.G. Suresh, Chairman, SICI Direct Tax Task Force, and Senior Partner Suresh and Balaji Associates to take over the session. I request you to take it forward, sir, please.
Thank you, Saranya. So I also take this opportunity to welcome Sriram and also the panelists for today, Srinivasa Ramanathan, Ravi Krishnan. So before I go to this very important session, I would request the chairman of the taxation committee, Sriram, to just give a small overview about SICI. Thank you, Sriram.
Yeah, thank you. Thank you, everyone, and good evening for joining us this evening on a very important topic, which is the most controversial as far as I could see. And Southern India Chamber of Commerce has been in the forefront in providing and discussing some of the latest topics as far as the taxation is concerned. Of course, we do conduct several workshops and discussions on several sectoral issues as well. But as part of the taxation committee, we have been conducting various workshops on topical interest and both direct and indirect taxes. And today we have the topic on 194R, which is basically a tax deduction on benefits and perquisites by any person to any resident in the country, which to my mind is quite going to be very incisive and quite elaborate one to cover. And I'm sure TG Suresh taking over the mantle will definitely conduct this along with the panelists from manufacturing and the service sector. And I look forward for a very, very important and very, very interesting discussions, engaging one for in the next 1 hour on this particular topic. This is the most relevant topic, I would say, at this point in time, and it is being taken up. It's very, very good on the part of SICI to take this topic and discuss today evening. Thank you, and over to you, TG Suresh, to conduct your proceedings.
Thank you, Sriram. You have set the tone for this very important program. So before I start the program, I will introduce three panelists. Srinivasa Ramanathan is a fellow chartered accountant. He currently heads the direct taxation for TDS Motor Company, two companies. So his career spans over a period of 25 years. So that is quite a remarkable. Congratulations, Srini, for completing 25 years at Silver Jubilee, that too in the same group, same company. It's fantastic. So I really welcome you because I'm sure that you have handled right from tax planning, transfer pricing, for fields to many things, and even I have a lot of interactions with you. Wonderful that you are here for today's discussion on this very, very important topic. So again, Mitesh, again from the manufacturing sector, so he's got more than 14 years of experience, not only in the tax, but also in the finance, external reporting, accounting. He also was handling both direct and indirect tax, but currently is handling direct tax as a senior manager in Saint Gobain. Mitesh, welcome to today's session. I'm sure that your experience and knowledge will help all the participants in today's program. Last but not the least, Ravi Krishnan. So he is from IT, chartered accountant, company more than 13 years of post qualification experience. So again, like Mitesh is not only in the tax, he was in financial reporting, business planning, was in CISA, management accounting, CMA, diploma in IFRS. I think just this qualification itself, I think, will take more than 1 hour. So that is the program, the timing for this program itself. And of course, now he is heading the direct tax as well as head of financial reporting as well. So he's from CP Technologies, Ravi Krishnan, with more than 13 years. Welcome, Ravi, for this program. So fantastic for all of you. But first of all, I thank SICI for our organizing this program and also the panelists comments to a very, very tight schedule for having present here and sharing your views on the various issues. The way in which We have structured today's program. This first 10 or 15 minutes, I will just give you, just for the benefit of all of you, about the overview of this 194R, because some of you may or may not have gone through, but and still, for the benefit of all of you, I'll take the first 10 or 15 minutes to just give the overview of this particular section. Then we'll have the questions posted to three panelists with their experience. They will share their views. But I would like to reiterate that whatever views which they are going to present here is purely their personal views, and they should not be construed as views of the respective corporates. Nor, of course, it is the view of Vicky, but it is they are representing here in the personal person. Their views are personal. That's something which I want to really clarify. Some of their associates are also participating, and their stand may be slightly different from what actually, because that's going to be a corporate stand is going to be different from the individual. So that I just want to set a tone start off. So again, it's somewhere, like we always have this very interesting way of drafting legislation in India. The one thing is that we always feel, so whether when you introduce these kind of sections, then you should have consulted very, very widely with the industry as well as the professional bodies before this. Maybe personally the answer is yes. But nevertheless, there is also another dimension. Possibly the government feels first you introduce the section, then we'll make a fine tuning. The debate will always continue. Now, this 194R is basically a reduction of tax on benefit or perquisite in respect of a business or profession. So basically, the you already have Section 28, Clause 4 of the Income Tax Act, which specifically provides any benefit received by any person in exercise of business or profession is actually taxable under profits and gains from business or professions. But in practice, the government is of the view that many people are actually not disclosing this income, whether it is a medical professional or anybody. Say, for example, I also teach tax. If somebody gives me a Maruti card, sorry, your classes are fantastic, I want to give an Audi card to you. Oh, I may or may not disclose this income. This is what they really want to capture, because so when corporates try to incentivize their dealers or their suppliers or anybody for achieving the milestones and targets, or even as a matter of fact, a lot of doctors and hospitals are also incentivized for the purpose of many products and other things. This is what the government feels, which is definitely an income which has to be captured, which whether it is actually done or not known. So they always feel withholding tax is one way of reporting this income, and thereby you can increase the tax collections, which the government always feels the tax to GDP ratio in India is very less. Therefore, we have to widen the scope of the tax. So that seems to be the basic idea behind the introduction of this particular section. A very quick this thing about what is this section is all about, just for set the tone, so that all of you can have some kind of a briefing before we understand the answers given for the various issues by the panelists. Other than individual or HUF, any person should deduct or should be compliant with this 194R. I don't want to use the word deduct for some very, very peculiar reason. I'll come back to a little bit later. And if you are an individual and HUF, you need to comply with this 194R only if your turnover in the last year is more than 1 crore, or if you are a professional, your gross is in the preceding year, that is not in this year, last year, if it is more than 3 lakhs. So basically, as Sriram rightly set the tone, this will apply if benefit of perquisite arises from exercise of business or a profession provided to a resident. So far, at least good is not applicable for a non-resident, at least not in this section. And there is a very interesting wording in the section. The person providing the value or benefit should ensure that the tax has been deducted at 10% of the value of the benefit of work. Now, very interestingly, if you go to the circular which was issued, that seems to be having a slightly different wording from what the law is stating. Now, if you look at this bullet point, the law is stating that a person providing the value or benefit should ensure that the tax has been deducted at tax. You have to only ensure the tax has been deducted. It doesn't seem to be saying that you should have deducted tax, but it's only you have to ensure that the tax has been deducted. But how the tax you can ensure it's been deducted. Or if in contrast, if you look at section 194B, which is there for winning from lotteries, if you get or in a TV game show, so if you get something in kind, say you participate in some program in a television channel and you win something in like a car. So what the television channel should ensure that the tax has been paid. But here, surprisingly, the language used in the section that ensure that tax has been deducted. Deduction is always made by the person who is making the payment or one who is providing the benefit. Now, how he can ensure tax has been deducted? See, if you look at the language of any other section, it's very simple. You have to deduct. 194C does not say when you make a payment to a contractor, you have to ensure tax has been deducted. You have to deduct. But for some very strange reason, the section is trying to use the word ensure tax has been deducted. A more better appropriate word could have been ensure tax has been paid. So the circular is trying to expand the scope of the section beyond what is contemplated by the law, which I'll come to a little bit later. And again, the section is also talk about suppose if your benefit or perquisite is wholly in kind or partly in cash or partly in kind, and if your cash component is not sufficient, again it is also saying you must ensure that the required tax to be deducted has been paid. So these are some very, very strange wordings. See, for example, if I say tax at the rate of 10% of value, or amount. So wherever the word used is value, the value has to be determined by rules. So here they seem to be using the word value, and the circular is also trying to specify that even cash is covered by relying upon this wording. So therefore, there seems to be a little bit of confusion while drafting this legislation. Maybe it could have been legislated. It just looks or gives an impression as if it has uh, implemented on a very, very hurried manner. They could have waited for some time, made a very wider debate and discussion, then they could have introduced this section. I think there seems to be in a bit of a hurry while introducing this section. That's where the wordings have become a little bit more complex. Maybe as the day progresses, maybe the next Finance Act, we might see some changes to the wordings based on the suggestions to which you are talking right now. And again, the section will apply only if the aggregate value of the benefit of work exceeds 20,000 during the financial year. So therefore, though the section came into effect only from 1st of July, if you provided in the first 3 months, that will also be taken into account for determining the 20,000, though you don't have to deduct for the first 3 months. But in calculating this 20,000 limit, you have to start from April, or the section will apply only from 1st of July only. So they also come back and say if any difficulty arises in giving effect to the provisions of this section, the board may, with the previous approval of the central government, issue guidelines for the purpose of removing the difficulty. But what if the guideline issued itself has got some difficulty? That is the question. But no, though this guidelines, so there is circular number 12, which is there, which was supposed to be issued for the purposes of removing the difficulty. What if that creates a difficulty? There is one more circular to this thing which we have to see. We subsequently see that guidelines does seem to be creating in some places a bit of difficulty. And what they are also saying that whatever guidelines issued here, which has already been issued, circular number 12 on 16th of June, and that has to be placed before each house of the parliament, and it should be binding on income tax authorities and on the person providing any such benefit. The reason for specifying this particular point could be, as most of us will be aware of, normally the board circular is only binding on the income tax authorities. The board circular are not binding on the assessee. So therefore, what they're trying to seem to suggest here through an indirect route, a board circular which is placed, because through a circular they're given this guidelines, and that says say that guidelines will also apply for the assessee, which is very surprising. That's not the way normally. The circulars given by the administrative authority are normally binding only on the department, and that normally is not binding on the assessee. Unless you want to do it, you have to be part of the legislature rather than part of the circular. That's a very interesting wording. So, what are the key points? What are the guidelines? Is it remove the difficulty, or is it creating little more difficulty? So, just couple of points there. They say that there is no need for you to check whether the value of benefit of perquisite is taxable or not in the hands of the recipient. You don't worry about it. If you provide that value in exercise of business or profession, your job is to detect. You don't have to check whether that person is taxable, not taxable. Don't go by all the things. You can give anything, even if you give a car, any capital asset or revenue nature, no problem. Everything you simply do only one job, detect. No requirement for direct tax on sales discount, cash discount, rebates. So this is a very important clarification they are giving. If you give a sales discount, maybe a trade discount or a cash discount or a rebate, no need for it to apply 194R. But however, those who are familiar with section 194H on commission or brokerage, we always used to have one small difficulty there. For example, take the case of all the telecom companies when they give you prepaid, if you take a prepaid plan. Now you will go and say, let's top up for 100 rupees. The retailer who is taking 100 rupees from you, they will not give the telecom company the entire 100. They will take off some amount, maybe say 1 or 2 rupees, just for the sake of example. They may give 98 rupees to telecom. What is that 1 or 2 rupees? Is it a discount or a commission? Has always been subject to a wide amount of controversy. If it is a discount, 194H will not apply. If it is a commission, 194H will apply. The problem here is that the person who is making the payment is not actually the deductor, it's actually the deductee. So the money is with him, and if this has to be complied, it is throwing a lot of difficulties to already difficult telecom sector. So in the last 5-6 years, are really struggling sector. Similarly, here the sales discount, cash discount, rebates. That could also trigger a little bit of a controversy there. We'll come to that. I think the panelists have got also points which they will definitely address on this particular point. And similarly, they come back and say a lot of times when you buy something, so if you take the case of, I used to see in many of this Louis Philippe and all those things, if I buy 3, take 7. So similarly, they used to have, say, you can take, if you pay for 6 shirts, you can take 8 shirts and all. So what they are trying to specify there, in those circumstances, there is no requirement to apply 194R. Because the additional is given and free, they are not subject to 194. That's a clarification like that. Now, what if you are getting a free samples? So they are saying, and these are the circumstances, the board has clarified that section will apply. So free samples, incentives other than discount rebate in the form of cash or kinds such as car, TV, computers, gold coin, mobile phone, anything you just try to give, that will be subject to 194R. Now you sponsor a travel trip either to the recipient or his relatives on achieving certain targets. Again, that will be subject. So if you are provided, let's say, a ticket for an AR Rahman event or for an Ilayaraja event, likewise, if you are given for an event or going to be given, and that will be subject to 194R. So medicine samples given free to medical practitioners. So they clearly specified that will apply. In fact, there is a very interesting clarification. Suppose a doctor works as an employee, a, a representative from a pharmacy gives them a sample. So recently, of course, you all know Dolo 650s and some kind of controversy. Uh, Somebody gives a medicine to the doctor. The doctor is an employee of the hospital. Now, according to this circular, this sample is subject to 194R, but should you have to report this or deduct this on behalf of the doctor or the hospital? So they try to put a very interesting point that you have to do this in the hands of the hospital. So hospital in turn, if it gives, for example, they can claim it as an expenditure, likewise, and they can consider this as a perquisite under 190 and TDS should be deducted under 192. I am very surprised and find out how this becomes a perquisite in the hands of doctor to be taken as a salary, because the free sample which is given by unless he consumes himself, if he is going to give to his patient, how does that become a benefit to the doctor to be taxed as a salary? So that is something very surprising in this example. There seems to be a little bit of confusion in terms of how these things operate. Therefore, the clarification, as I told you, creates more difficulty there. Then they also anticipating a situation of what will happen if the doctor is a consultant, and then how it will happen if it is the hospital. It will be hospital if it is a consultant. I think the clarification seems to be making it more confusing than the clarity itself. So that is some very interesting challenge. So similarly, they also try to come back and say, suppose if you are going to give it to a relative or somebody representing the entity, so the entity is one which is going to be the one which is supposed to be receiving this benefit. The reason given was the entity is the reason for somebody else getting the benefit, and therefore it should be taxed only in the hands of the entity. These are all, as I told you, the clarification is not mine. These are all what is there in the circular. And the most interesting part of it, the very unfortunate part of it, see, many a times when I go for an audit, the traveling expenses of the audit could be borne by the client. Obviously, he has to bear the expenses. So whether that is subject to 194R was also answered in this particular case by the board. So what they're saying, let's assume I stay in a 5-star hotel in connection with an audit, say in Mumbai. So now the issue is that whether if I'm going to meet the expenses on my own and the fees alone is charged not for the travel, but only I charge the fees and I bear the expenses, they say it is my business expense, and of course there is no issue at all. Now, if these expenses are made by the company for which I'm providing the audit, so what they want to do is, did I book the hotel in the name of the client or me? Is the question. Suppose if I book the invoice, I tell the hotel directly put it to the client's name. So then in those cases, they say that 194R will not apply. But if it is not in the name of the client, say for example, I book in my name and then if it is reimbursed, then in such circumstances, 194R will apply. So whether it is deviating from the principle which is already initiated in 194C or 194J, because we take the case of 194C and J, if a separate bill is raised for the reimbursement of expenses, C or J will not apply was the clarification. Only when I raise a total bill, TDS is required. It's again a board clarification on long back in 8th August 1993. So here in 184R purposes, is it really a value of benefit? Is a question. And what will the implications from the point of view of the GST also in this connection becomes a very interesting part. So similarly, what will be the position in the case of dealers conference? Also, they specify this. So there is no requirement to apply the provisions of 194R if the conference is to educate the dealers about the new products or how the product is better than this or obtaining orders. If it is more relating to the business, they find it's okay. There is no need to apply 194R. But you cannot have a conference which is a namesake is a conference, but it's basically to give them some benefit or incentive only to a particular dealer or a conference. You just want to say top 5 dealers will meet. Now, those kind of those things, they say that is not a generic product launching type, and therefore it is more a benefit which you are trying to pass on indirectly in the name of a dealers conference, and therefore in such circumstances 194R will apply. But the only point is that how do you decide this? It's a very challenging part of it. So again, very interesting clarification was if you are this thing also is a leisure trip or leisure component out of that. So first 3 days, say normally many times when the CA conferences happen. So first 2 days there will be a seminar. The seminar is normally they also in the seminar. So when you attend the program, half a day or so on the last day is reserved for an outing. Because when we suppose assuming a program conference is held in Srinagar, having taken up all the way to Srinagar, at least for a day or so, or at least half a day, the branch which is conducting the programs to arrange for some sightseeing trip. Now, similarly, in the dealers conference, if you also try to arrange a sightseeing trip or some kind of a leisure, they say that 194R will apply. So that means even though it is a dealers conference, if you are just trying to also during the course of it give some kind of a leisure component, you have to provide. The one equation once again arises, how do you determine this amount? Those are some challenging parts of there. And similarly, if in the dealers conference, family members accompany, so they say to the extent of the family members, it will be considered as 184 hours. So let us take a very simple problem. Me and my wife go for a conference. All the food expenses are met. Now, total bill consists of 4 idlis and 1 coffee. My wife doesn't have a breakfast or a dinner. She never has coffee. Now, how will the department look at 4 idlis, 1 coffee? You divide it at 1/2. But actually, she has not taken anything. To prove that, what should I do? Should I take a video? Ask the person who is serving the food. Please take the call. Ensure that I only ate, not the other person. So these problems we already have in boarding and lodging in Rule 37 also. Now, again, expenditure on, this is the most interesting part of it. Expenditure on participants of a dealer or a business conference are the days which are on account of prior stay or overstay beyond the dates of such conference. Let's assume the conference starts at 8 o'clock. I go the previous night. See, at 8 o'clock conference, I cannot reach at 7 o'clock and come. So normally we start the conference early morning. So let's assume we invite all the dealers the previous day. So now, on account of prior stay or overstay beyond the dates of such conference, so that means I should call them on the same day and ask them to leave same day. But so therefore, even if I ask them to stay before, or if the conference goes up to 9 o'clock, take the same flight, catch a 12 o'clock flight. Otherwise, the next day. See, therefore, these are all, as I told you, these are all, I'll tell you, these 194 R2 says these are the guidelines for the purpose of clarifying. And if you're all getting clarified beautifully, I also would like you to clarify this, but it's not getting into my mind. And therefore, I will be very happy if I'm enriched on this particular point. This is the best of it. As I also did, I through the section was trying to use the word ensure. We also have a similar provision, section 184, which I briefly mentioned. Typically, how do you ensure? Assuming that I give some kind of gift or anything to my dealer. So what I am just going to do is, I will ask him to pay the tax only on payment of his tax. I take an advance tax challan. After that, I should give the key or anything. So normally, when you see the Super Singer program, they will show a beautiful big key that will never open a car. It will be there a beautiful show. But unless you pay the tax, Vijay TV or Sun TV will not give the key to you. So because of the wording is ensure tax is deducted rather than ensure the tax is being paid, they have to make this clarification. And what they are trying to say is that in this particular case, first option to you as an advance tax. And this is very surprising. Not only you collect the advance tax, you have to report this income in your TDS return and form 26 you. You have to include, put the challan number as the advance tax challan number there. Alternatively, what they say is that before making the payment, you yourself bear the tax. But when you bear the tax, the amount you pay should be considered as a net payment. For example, you give a 90,000 worth of television set to the dealer as a benefit. Now you cannot deduct 90,000 to 10 by 100. That 90,000 should be taken as normally if I give 100 rupees, 100 minus 10, 90 is the net payment which you'll get. 100 is a gross amount, 10 is a net is 90. So what they're saying is that if you choose your option of instead of asking the other person to pay the advance tax, if you yourself decide to pay the tax on this, you should also do a concept what is called as a grossing up and make the TDS. That means you have to value of the benefit. Let's assume 90,000. Then what you should do is into 10 by 100. No, into 10 by 90. And thereby take the gross amount provided to him as 1 lakh. TDS is 10,000. Net amount is 90. That means the other person who has got the value of 90,000, he has to report in his income 1 lakh. Or you also should be considered as 1 lakh. And accordingly, you have to earn. So, just visualize, maybe a big corporates can have a tax department do it. How does the small and medium enterprises are going to really, if at all they have this? They may say that they may not have it, but I'm saying they don't have it's going to be a very difficult compliance part. And the last point, because I don't want to take much of a time and just want the panelists to give their version. So the value of this thing, if you are purchasing from some outside, no problem. Purchase price will be taken as a value. If you are a manufacturer, then amount you charge to the customers will be the value. So whatever amount you charge to the customers will be the value. So here also there could be challenge, because I don't think every bill is going to be a uniform bill, because of the fact if somebody, even when you attend a conference, if 3 people from your office go, they definitely charge a lesser amount. Always there is going to be a concept of quantity and other things could be there. So therefore, but still what they're trying to say, if a manufacturer providing this benefit, whatever you are charging to the end customer should be the value. If it is not covered in any of these things, fair market value should be taken as the value. So these are the clarifications which are given as such. What I've attempted here is to just give you the overview of what is there in the Act, and using one of the provisions of the Act, what are the guidelines given. And this is about 194R based on the Act and the circular. This has thrown up lot of issues practically, and I have three gentlemen who have been practically handling taxation for quite some time and have many of these issues. As I already told you, these are the answers they are given as the personal view. Now I'll just keep the floor open for the panelists. I said to the panelists that will take only 15 minutes. I've taken slightly more than that, but the idea is first you understand this section so that the queries can be answered well. Before we uh, go to the specific questions to each panelist. So all the panelists, one question. Now the government is definitely wants to create ease of doing business, and definitely that has been the motto. Is 206C1H, which is a TCS on sale of goods, 194Q is 194R. Do you think to some extent this is reducing the ease of doing business? Is it increasing the complaints? And possibly, is this section could have been introduced after a wide consultation? That's something which the panelists think, starting with Srini. So 194Q, 206, 1H, 194R. Are they really diminishing the wonderful philosophy of the government? They want to definitely improve the ease of doing business, and they have been taking a lot of effort to do it. Is the introduction of this top of this section, is it diminishing that to some extent?
Warm good evening to all of you. Sir, with regard to ease of doing business, see, not only the sections that you have mentioned, even section 206AB, wherein the administrative responsibility of checking the income tax return filing also has been passed on to the corporates. It's becoming practically difficult to administer all these things, and these kind of things poses challenges even to the statutory auditors. The auditing community also, they face lot of difficulty in ensuring the compliance. And nowadays, most of the time, the accounts payable team, who are primarily responsible for ensuring compliance of these provisions, they find it very difficult, and they take a lot of time, and they need to work with the information system department on how do we configure on all these to comply with all these provisions. See, we are talking about a size wherein some 6,500 grns are made every day. So all those cases, and also when we have branch offices, regional offices situated across India, we can't have a manual system of checking each and every such claims from dealers, and then say whether the section will apply or not apply. See, we need to automate quite a lot of things, and this poses a lot of challenges. Like when we want to standardize so many things to ensure that the system takes care of all the compliance matters. That is how today in digital world, where we use digitization as one of the priorities, you can't standardize certain transactions. Compliance means it gives a lot of difficulty to the industry, and a lot of administrative work. So that is what is our opinion.
Mitesh ji.
Yeah, so I do agree with Mr. Srinivasan. So when the first of all the TCSS came into the picture, so we had to talk to our global team because our SAP is not in localized base. So it is a from it is been handled by from the group. So it is not an easy to capture such kind of taxes in the SAP because it's a global template. Moreover, another thing, another issue, that of course, there's a cost involvement in this. And see, we are into the manufacturing of construction products, one of the businesses. So where in which the majority of the customers are not literate, and it is very difficult for them to make them understand that this is going to be a TCS and TDS and now this 194R. So it is very challenging. So we are getting a different. Sometimes it becomes a, we are being a chartered accountant, so they call us and then they clarify from us what we have to do and all these things. So I do agree with Mr. Srinivas. It is not a certainly ease of doing a business.
Ravi,
Good evening, everyone. So, while I agree with the points of the panelists with reference to process changes, right, the amount of application that we have to handle internally to comply with these provisions, yes, it is a burden on anybody doing business, even for particularly for small businesses, right? Larger companies, we can afford to build systems, we can afford to have teams who can develop systems over time, but smaller companies, MSMEs will be hard hit. But looking at other angle of ensuring compliance at source rather than at assessment level. So if you see government over the period has been showing steady decline in number of scrutiny assessments. So from that perspective, shifting burden at this end and not harassing us through 201 proceedings, right? All said 201 proceedings are not as it is being handled at scrutiny assessment level. So looking at that perspective, it is not so draconian. Only process for larger companies at least, it is only process issues and resources issues. But definitely smaller companies, it doesn't take the ease of doing business.
so maybe do you think that even for necessities like companies, like just what they have as a ceiling for individuals, a 1 crore limit, is it worthwhile to consider a limit even for companies and partnership firms also, so that whenever these kind of sections are introduced, first we can take the larger companies, maybe start off with issuing with companies with more than 25 crores or 50 crores or some threshold of it. I'm not exactly with the number. And then say the experience of that and then extend it to others. That possibly could be a better idea. At least the smaller SMEs are, at least for the time being, not being subject to the complaints. At the same time, with an experience of this, we can refine the section so that it becomes a little bit more easier. Is that something which so all of you think could be a better choice,
Yes.
especially in the sections like 194R?
Yes, sir, definitely. See, that's what they did with e-invoicing, right? They started off with 100 crores and slowly they have reduced to 20 crores. So that kind of approach could have been better.
Yeah. So, so now, so normally, like, so I'll first this question to Srini first, and then I'll take a different question so that we have more number of questions. Uh, Now, Srini, see, like a lot of incentives are normally going to be given to the dealers. Sometimes we may be also giving to the dealers, employees, and they may be also carrying the logo of a particular company. Uh, so now, in those circumstances, do you think it's something where this section will apply? Then what are the challenges you are posing in applying this? Maybe for if you take, you are giving only to the dealer's employees, which per se, if you take it, it may not exceed 20,000. But if the dealer has got multiple places, multiple locations, and if you give t-shirts to the employees, overall the number could cross 20,000. So for each particular person, it may not exist. So from your point of view, the t-shirts are something, or even suppose you give them out of the dealer for a particular employee for his outstanding performance, because we always find, say, for example, in my experience in buying one of the cards, so I approached the same thing in two different. First place when I went there was nobody to even respond. So we want to inquire about the car, and then somebody came after 15 minutes, and then nothing could have. But when we move to a different this thing, the entire experience is different. I think I would say, though we like a particular brand of the car, but the initial experience, we even thought we should move to some other car. But again, another showroom of the same car dealer, the way in which they approach, and possibly we bought it. So therefore, it maybe they all take the survey, and I also put the survey. One reason for this is this particular person. Let's assume based on this, the dealer recommends you to give something. But how do you view it? Is that the board circular's clarification that it's only the dealer which is responsible, not the end user? Is that something which, or how do you view this?
See, it's going to pose a very practical challenge. Probably we are also thinking of how do we organize such incentives in the down the line in view of this kind of provisions. See, not only the t-shirts, sir, even sometimes gold coins. It may be worth 25,000, more than 20,000, which may be given to dealer staff once in a year, where we have long, big dealerships. We may incentivize the employees, who have done very good retail sales from that dealership. So in all those cases, now we need to have, the dealer agreeing for, making a TDS on his name, and he has to, the way he has to account that and take credit. So, firstly, educating the dealers are going to be a big challenge. Like, hundreds of dealers spread across India. So, and these sort of promotions are very common in this, industry. So, in such cases, the implications that are going to arise that we need to see. And also when we are going to say that we are going to deduct TDS, that will also be objected to by the dealers, especially when we are on a cash and carry business where we have to debit their account and then wait for next set of orders to the next set of payment to come and then adjust this debit. All these are going to give a big a problem. So now we need to think whether the way whatever the way we are doing carrying out all these activities, whether we need to do in a different fashion, is something we need to now think upon.
So, Mitesh, what about, so you may be also providing, if they achieve certain retail sales volume, you might be given that as an incentive. Uh, do you think it has to be reduced from the turnover for you to get this benefit, or the turnover you show as a full amount and you try to debit this as business promotion expenses? At the end of the day, it is also going to be the question of the turnover, so the top line also matters. But how do you view this? If the incentive which you are going to give for achieving a certain targets, which normally if you try to give, and will it be considered as what has been specified in the circular, or what is your view of the same?
Yeah. So we have a various kind of discounts, including the incentive discounts. So we give the rebate discounts which is based on the turnover criteria, or the volume based discounts, or the value based discounts. So that will be, some discounts are definite and some discounts are to be valued or seen in the month end. So we will calculate that discounts and we'll offer as a rebate, so which is passing through as a credit note only, and which will be, some businesses are adjusting in the running account, as Mr. Srinivasan said, that will credit to our customer account, and as and when next order comes, it will be adjusted. For us, we also runs several incentive. Okay, department has said that this all are also benefit, but to remove the difficulty, practical difficulty, they said it is out of this 194 are cash discounts, sales discounts, and the rebates. Now coming on the incentive parts, so we also runs various schemes, which is a incentivized, basically incentivized. So which is like a for entry, with family or with the dealers, and giving of a gold coins and scooters, car, as we mentioned, by achieving a certain types of turnover. We also have a loyalty program, so just like we also use a credit card in individual capacity, where we swipe and earn the point. So same way, since we are an MNC, we are not selling to the retail markets, it is through the distributor model only. So wherein we architects and other things are also involved in business activities, so they earn points by doing the businesses with our dealers and our customers, and they earn points and they register ourselves in our loyalty program, and they redeem that points through an intermediary, wherein which they can by accumulate point, and they can redeem whatever based on the number of points, like car, fridge, mobile phones, foreign trips, and all these things. Now the question is that in that TDS will be applicable because it is in relation to the business and these things. But now the problem is that we may not be having the PAN numbers and details of that particular third party, wherein which we don't have any account in our SAP or accounting software. So that thing has to be grossed up. That's what I feel. So this definitely 194R will be applicable on these incentives, except for the 3 words they have mentioned about the cash discount and sales and rebates. Which
No, is that something? See, the section 1 says you have to ensure the tax has been deducted. Now, assuming in this particular case, which you talked about, that the intermediary on the payment to or on giving this, because you are operating front end, if that person has actually done the deduction, because here in your case, the end user is somebody who's different, right? Or the person who's doing the scheme is different. Actually, you are only going to make a payment to, or your this thing is agreement on the intermediary. The end beneficiary is going to be somebody.
yes.
When your intermediary is actually has deducted, don't you think that your obligation is not going to be there, because at the end of the day, otherwise there is going to be a multiple level of withholding tax, right? And you are only required to ensure. So therefore, is it possible where the intermediary, suppose, because for him, when he's just evolving the scene, I'm just trying to put a slightly different dimension here. Is it possible for him to say, yes, that intermediary has done it, and therefore I don't have an obligation here?
No, we had a discussion, 1 or 2 round of discussion with intermediary as well. So see, it is what they are an agent appointed by us. So it is only a managing the show. It's just a tool which they are managing, just like in Paytm app, we just are enrolled ourselves, we put a mobile number and all these things. So it is just a managing the show. It is only a Saint-Gobain has to do the business with them because they are purchasing your product, they are earning the loyalty point. It is only, instead of you are doing from in-house, we have been appointed for that. So that is when it is the Saint-Gobain who has to do the compliances, not by us. And they also said that they have introduced the contract that TDS is the responsibility of the businesses in the contract with the new section.
Yeah, right. Thanks, Mitesh. So, in fact, before Ravi, yesterday somebody called me because a lot of people call us, and of course, could be for some credit card or could be some loan. And most of the time, these callings are nowadays done by some robots also. But you take a day, so it is sometimes it's frustrating. But nevertheless, a call came and I just took the call and I said that we have some practice management software. When you implement this, virtually everything in the world can be done. So you just put the dashboard, you will know everything, right from your invoice to what your articles, where they are doing, everything you know. Even if they're having some tea, coffee, you can see. So that kind of these things were what I said. Okay, I've heard a lot of this. You give me 1 year of trial, or 1 year. So at least give me 6 months of trial. So then, if I'm satisfied, I will try to buy or the thing. So now, assuming after 6 months or the thing, I'm not actually subscribed because I'm not satisfied. Because you know the YouTube premium is there, so they give you 30 days free, and then of course after that, if you're interested, anytime you can cancel. Many of this, the economic time subscription, money controls, all of them give this thing. Do you think this will be considered, assuming the threshold limit is crossed, just for the sake of thing? When you offer this free trials and other things, is it to be considered as a benefit of workers in next stage of business operation, and whether that will be subject to withholding tax? What's your take on?
Yeah, so like I said, so this free samples clarification that is provided in this circular, right? That is causing additional confusion, right? They are saying free samples provided, particularly, I don't know what they have, particularly for medical profession. They have told free medicines to doctors more specifically. So if you have to apply this interpretation to services also, there are a lot of whatever you are mentioning of YouTube, your Spotify, all these are B2C transactions. It could be small, but even for larger applications like a cloud application, for which subscription will be easily per month, definitely it's going to be in lakhs, right? These are offered free of cost for customers to experience the service and then on board, and there is no compulsion to take these services after the trial period, even for B2B cases. So in such scenarios, definitely this free samples in the circular is causing a confusion. Prior to that, before the circular, that was never in our mind, but now with specific inclusion of free samples, this free subscription provided to customers is a problem, right? We feel that it will be a benefit, which will be construed as a benefit. Probably like Srinivas told, we might have to look at a different model. We invoice the customer and then give it as a rebate. So in that case, it will not be considered as a free sample, probably something like that. But then again, we'll have implications on GST. GST, as long as it is free, you don't have to pay GST on that. Now we'll have to invoice and then give a rebate. All these will be an issue. We'll have GST. They don't see credit notes so benevolently. If you have a rebate again, there is a question of what kind of revenue and transactions are there. So it's not just going to have an impact on what we do for income tax compliance alone. It's going to impact whatever we do here. It's going to impact our GST, and also to an extent what we report as revenue or anywhere we now need to have a reconciliation, right? What revenue you report in income tax return, because these benefits you have to construe as return in income tax benefits, income tax. So you will have one income in income tax return, which will not be an income in GST return, and which will not be a income in your books of accounts. So you do not know what is going to happen with GST. All of a sudden, suddenly they may wake up and say you have construed a value for it, pay GST on this. So all these are challenges. Though we feel that it is going to be a benefit, it will be construed as a benefit. The way it is going to be handled and what kind of thought process the department will have on such transactions is something which is worrying actually.
Still in continuation of that, likewise, you may be also getting some kind of packing materials or something like that at first to be used and just find out whether it is working for you, because I don't think you will right away put the order, right, at the end of the day. So yeah, especially when you are in the service customer facing industry, and therefore you have to be a lot more careful, and in the supply chain management is one of the very, very crucial aspects of a company like yours. Of course, obviously, therefore, you would like to test the materials, be it a packing material, anything. But so how I mean, your thoughts on this? Given the fact that the free samples basically seems to be more from the doctor's perspective, it seems to be there. But I don't think it is mentioned is only for the medical profession as such. So it looks like any free sample covered. The only thing what is excluded if you buy 5, take 7 types. So that seems to be covered, but not this, and especially the safety mentioning that free samples. But what is your view? Can we really say it's a benefit of Oxford? And what is your view on the same?
Yes, sir. One of our group companies where they manufacture specialized packing material, they actually give some samples for trial purpose. They don't use the word free samples, but it's for trial purposes. That is the way we have been, naming the transaction so far. So when the packing materials are given, which are specialized packing material and which are used in ocean, transit, so the customers, potential customers, I would say, will also use that packing material only on certain, rejected items or not, quality defect items to see, what kind of benefit that they are getting, in our packing material, especially on rust formation, etc. So here, whether the customer is getting any benefit, I'm not sure, because they are also not going to use the trial samples in the material which they are ultimately sending it to their customers. They don't want to take the risk if the product fails, if the packing material fails. So definitely they are using it only on some of their defective products to see that the packing material meets its intended quality. So in those cases, probably we are thinking that the neither the customer benefit out of it nor we get anything. So it has to be, what we think is that this section should not apply on such cases. That is the way we are thinking, but yet to come to a conclusion.
So Mitesh, so there could be a lot of circumstances where many companies follow a system of the writing of receivables beyond a point of time. Maybe if it's 6 months or so, you just try to write off the receivables. So when those receivables on a conservative basis are written off in the books of accounts, will that be construed as the value of any benefit or perks provided to us to attract the 194R? Uh, what is your take on?
Ritesh, you are in mute, Ritesh.
Yeah, sorry. So if we have to elaborate this 194 hours, so even if I'm writing a bad debts in my books as a written off, it is a benefit. So in a person, if somebody is telling me to don't give me whatever money it's owed to, that it is a benefit passed on to. So if I write a bad debts in my books, it is a benefit certainly passed on the other side. Now the challenge is that I have already offered this as an income, as and when my billing has been done to them. Now I'm not getting that money by writing of this amount in my books, whether the TDS has to be deducted or not. So now the question is that if even if I have to pay the TDS under this 194R, that is additional 10% cost. I am not getting into the grossing up and this thing as of now. So even that 10% is additional cost to me by just writing of my book, cleaning of my books. The second thing, it is a unilateral thing. I don't know what the other side the person is doing, whether he is going to give me or not. Now, assuming I am paying TDS on that, assuming for in my example, it will be reflected in their 26As. Then what if whatever legal case is pending for recovery of that cost? Should we have to assume that I am foregoing this money, and whether it will be an advantage for them from the payment perspective? Okay, I'm not getting into the what income he has to offer, whether he's in position to pay tax, is filing the return or absconding. I really don't know about it. So I'm not getting into that thing. So whether that particular line item is coming in their 26As as a 194R. So whether with that I have to withdraw my case, or whether my case will be weakened, or I really don't know. We don't have an answer for these things on this. So and what I suggest, even if they say that debts, the TDS needs to be TDS, if even if it is applicable on 194, if somebody wants to take that view, then we are filing the ITR 6. In that there is a section other expenses where we report the bad debts by the PAN number wise. If department wants to know, they can take the details from that ITR 6. They just want to know the number where in which we have written of the debts.
See, the only point here is that, so suppose if due to the financial difficulties and other things, if you write off as a bad debts, at least but there are a lot of companies on a very conservative basis. They write off any receivables beyond 90 days or 180 days. As you rightly said, it's a more a unilateral act on their side, not because they are going to forego the claim. It is more because of the fact they now once you cross 90 days, they write off, say, 25%. But it's more than 1 day, they write 50%. Once it is more than 60, 100%. It's not because of the debt has actually become bad. It is more a conservative accounting on the side. They don't want to take receivables beyond 1 year as receivable in the books. It's also going to be flagged off in any case by the auditor as well, because if it's going to be outstanding for more than 1 year. So therefore, there is no real benefit actually going to be there. Just because you write off on the basis of a conservative principle doesn't make it as something which is for him. So therefore, and as you rightly said, it's again further throwing some more good money on the bad money. if you also have to spend TDS on the same. So which is something which I also feel that should not be subject to 194R. But however, at least if there is a, if you are also going to ask him, please show the advance tax. I think he is going to really laugh at you, boss. I don't have the money. Where other if I have that much of money, I would have as well paid the receivables to you. So why should I pay the advance tax also? So, and what if there is a sufficient loss where there is no taxes payable by him? That is the question of he paying advance tax. Taking a slightly different point, you say that the person, what if he has got a loss? And where is the question of paying advance tax? In those circumstances, can you take that as a sufficient compliance from him? Because I have adequate losses for this income, therefore no tax is payable by me. Is that something is going to satisfy us as another? Because here one advantage is that you have to only ensure the tax is deducted. They are not saying you must deduct. So therefore, whether that is a sufficient compliance, that will be a very interesting one. But anyhow, we have time will be the test there. So now coming to Ravi, so now this section, now most of the sections are a lot more simpler because they say you should deduct tax at the time of credit or payment, whichever is earlier. But we take the case of a salary. Uh, the question of deducting TDS arises only on payment basis. Now here, the tax, you have to ensure that tax is deducted before providing. What do you think according to this is the exact time? Provide means what? Unless they say, for example, if you give a say take from CDs this thing, so when TVS Apache, and then you want to give, so before you hand over the key or before, what is the timing according to you? I'm not able to get anything. Maybe I thought I can be enlightened by your observation on the same.
The timing, they say it is prior to, before providing the benefit, you should ensure that it is deducted, right? So they are saying before providing the benefit. So when do I really know that the benefit has reached him, or when you make a provision for that benefit, or when you release if it is relating to a ticket booking, they say when you raise a ticket booking, when you book a ticket on behalf of someone else, does that mean that at that point you will have to deduct tax? What if it is an event after 1 month? Today I make advance reservations, and I have to show that as a benefit today, and he doesn't participate in that event. You eventually end up canceling, right? So all these sales conferences we plan at least 3 months, 3 months to 4 months in advance. So
now the COVID is not yet over. We know there are many things we have cancelled. Even marriages are postponed, marriages are getting cancelled. A lot of rearrangements were done. So therefore, in those circumstances, as soon as you book the ticket, unless it is an event which is contingent, right? Therefore, how can we really plan for it? At the end of the day, the event has to actually happen.
Correct. So again, this comes to this administration. When do we exactly ensure? See, from company's perspective, when you look at process, it is ideally at the time of booking invoice that we control, right? The moment you don't control at that point, it is very difficult to ensure compliance. So we might have to we will have cases where we deduct at the time of raising invoices or booking invoices in system, and then probably if there are some reversals in the future, again we go back and revise returns. First you deduct and then file return and then revise. Probably that could be case. Similarly, on reimbursements, they are saying now out of pocket expenses reimbursement is going to be covered under 194R, right? This specifically overrides. This is a specific section which says it is a benefit now. Now, when will you? When does the incident of tax arises? This benefit providing, whether they stay at that time, you make a provision, and if they raise any reimbursement bills after 1 year, will department come and say you have paid the bills which are relating to 1 year previous year's invoice? So you should have deducted TDS at that time, and they will raise 201 interest. We do not know. Right? For consultants, many consultants, they don't raise reimbursements on time. Reimbursements is governed under contract, so they raise after 6 months, 9 months. If any financial year crosses between, we do not know what kind of issues that we might face with department assessments.
No, how challenging it is going to be, because the section, I'm still very confused about the way in which they use the word. Ensure tax has been deducted. So deduction is something is going to be done with the deductor. That is person who is providing. Now, I am not still able to understand the wording. How you can ensure tax has been deducted? Because one, you have to either deduct or this thing. See, I cannot come back and say, see, you are the person who's making the provision. So if the recipient's obligation or the person in receipt of this, okay, only thing the language is 194B could be more appropriate, where you should ensure the tax is being paid. But here, I'm surprised with the language of ensure the tax has been deducted. Added to that, the circular was also talking about the obligations on you, which is not the section at all. But having said this, how all the three of you will consider this a challenge? Because as the circular mentions, you ensure that first the recipient pay the tax through the advance tax challan. With your experience, how all the three of you consider that to be an easy one or difficult one? Because at the end of the day, you are here only to ensure. Now, why you are breaking your heads as to whether it's applicable or not? You just simply come back and say, boss, I have given an incentive to you. I'm going to give one beautiful BMW to you. If you want the key for that, you're one. Pay the tax, show the challan to me. Then I'll give. Is that something going to practically work?
No.
Or do you think that method is not really going to incentivize things? All the three of you, because you know the practical challenges are so. So now the ensuring of tax paid, pay advance tax and take the key. கையில காசு வாயில தோசை. நீ அட்வான்ஸ் ஆக்கிட்டு செலான காட்டு உனக்கு பார் ஒரு பக்கம் பிஎன்எல் கீ ரெடியா வச்சிருக்கிறேன். How practically it is possible?
It's going to be really difficult, sir. Especially quarter closing now, a lot of issues to be now discussed with the auditors. That is how it is going to be. See, this particular section. That is what, sir. As I mentioned to you earlier, I think we have to rethink many of the transactions which we are doing currently. How we can make it little different. It's not that we are avoiding or something like that. How practically this provision has to be complied with. We see, no, this particular guidelines what they have issued is not giving clarity on many of the issues. As we all discussed earlier also, they are saying that discounts, incentive and rebates, but they are saying ultimately this has to reduce the sales realization or the purchase cost. That means is the department is intending that all these incentives are given and netted off against my sales for avoiding the section 194R. Is that the way the department and the officers are going to interpret that? Itself we are not very clear. So many of us we will do account it as a sales promotion expenses or so only. So that is how it happens, because the timing difference between raising the invoice and the credit notes also happens at a different point of time, and generally it's an accepted practice that we show it as a sales promotion expenses. So it's going to be really difficult, and we have to see how whether the department is going to come out with some kind of a clarification on this provision.
Miteshi.
Yeah, so I agree with the panelist. With these new sections, we have to think through that how we will do some of the transactions, we'll have to, and this involves a discussion with the multiple levels of the or in the organization, including the outsiders. So definitely, the government needs to think through this 194R and just come back us with the few clarifications and new circulars that how to handle this kind of situation.
Just a simple state, how easy it is for them to pay advance tax. Possible?
That's I don't see personally. It is not an easy. It is not an easy.
Ravi, so how easy do you think? Yes, boss. ஒரு கோடி ரூபாய் காரை கொடுக்க 30 லட்சம் ரூபாய் உனக்கு டாக்ஸை கட்டு 1 கோடி ரூபாய் வாங்கிக்க பெனிஃபிட் 1 கோடி. How easy it is?
Oh, it is not going to be easy, sir. It's not going to be easy.
So you will think 30 lakhs கையில பணம் போறதா யோசிப்பான்.
Yeah, definitely. That will be the view. It is a cash outflow there. That is one point. But both this section drafting of the 194R and the clarifications, I don't know how they have come up with such confusing provisions. With all due respects to legislators and bureaucrats who are involved in this. Particularly the circulars that they have issued looks like in reaction to WhatsApp forward, right? My mom believes whatever comes in WhatsApp. she'll say they're paying 1,000 crores for this. If I click this link, can I do? So somebody might have told these bureaucrats that doctors have made 1,000 crores in Dolo 650 free samples, and they have believed and told free samples for medicines. Definitely, it is included. I don't know how a doctor earns out of it, right? With those free samples, either he distributes it. He's not going to have everything and build a port out of it. I don't know how that is a benefit. So there are a lot of issues like this. The circular is, like you said, is more confusing. There could be clarification of clarifications. But like what we have been going through last 4-5 years in terms of legislation, and this is something that you take and we'll see how we can manage this. You first take this legislation, then we'll see how to manage. All legislations in the recent past have been like that. Even 206 AB they introduced, and then 1 year later they came up with a portal to verify the status. So all this will be one such case where it might evolve, or it will continue to pose challenges.
Possibly, if you have, I don't know whether you know swimming or you attended swimming class. So normally, the trainer will always come back first few days for 4 feet. They will allow you to swim. In fact, when my son was going to swimming class, the third day suddenly he put in 10 feet. My wife was screaming, "No, என்ன போட." That person come back and said, "Boss, நீங்க இருக்குன்னா இங்க இருங்க, otherwise get out." If I ask him to swim at 4 feet, he's comfortable to swim at 4 feet. You have to throw him in 10 feet. Just find out, நான் தான் பக்கத்துல இருக்கேனா அவ்வளவு பக்கத்துல இருக்கேன் அப்படின்னு questions. But he says you put 10 feet and they will themselves come out of the swimming pool. So that's what you will swim. That is a one way to make you a better swimmer. Maybe the government also thinks, okay, that's a one way to make the Indians more compliant. Just put them in the 10 feet, whether they
No,
know
if it is,
swimming or not.
if we know it is a, if we know that it is a 10 feet pool and a trainer is nearby, it's fine. But what if it is a 100 feet pool that we do not know where the end is?
So, so that's why. But I think one last point which I would like to add here is that I think the applicability of Section 40 IA, I would say it's a slightly bit of a question mark here for the one simple reason, because the section only says you have to ensure the tax. But if you read 40 IA, it is, of course, in turn is going to depend on 201. So the requirement there is that either you should have deducted or the deduct amount should be limited. Take, for example, in the case of a Unilever, the Bombay Court took a very interesting stand, because their hammam soap and all, you know, that they will come out if you just write some slogan, why hammam is hammam. And if you put a write a slogan, then they will give one house and all. So what happened was, when there was no TDS was deducted on that. But so though there was an obligation in the section 194B, but what the Bombay Court said, since there is no requirement to deduct tax, what I have to ensure that tax has been paid. If you're not ensured, I'm not an assessing default in the 201. And once I'm not an assessing default in 201, 201 1A may not apply. So will be the 40A or 40A series. So that could be one kind of a stand with SEC. But I think that is the one reason why possibly this particular case, instead of using ensured tax has been paid, they would have tried to use the word ensured tax has been deducted. And through the circular, they say that you have an option of deducting TDS. And if you use that option, and if you don't do it, possibly they can bring you under 201 and 1A. So that could be the slightly different underlying logic here. And I really thank all of you for really taking your time off amidst your busy schedule. I'm sure that Srini was actually in the factory in this third time call, and I know how Mitesh, amidst the Mumbai rains, is just trying to brave himself and come here. Ravi, of course, being a technology company, we don't know when they will have to work, because the timing, US timing, UK timing, India timing, all timings you guys have to work with all these things. All of you have taken the time to come here, and I really also thank Siki also for organizing this wonderful session. We are not sure that we have clarified every issues you also have in your mind while coming to the program, but the idea is not to clarify. Idea is to share that lot of issues are there, and this is a very, very important section. And the idea with this program was to create an awareness and alertness, not to solve whatever you had as an issue in person. If you still have a lot of questions, I think Charanya has told that we should have the program at 4 to 5 only. We already taken 15 minutes more, but we will very, very happy to give our personal views on whatever issues have. Do write to us or to write to Siki. We will be definitely, all of us will be in a position to handle all the issues which you have. As I said, with the disclaimer, it's our personal views of the matter. Like ಇದೆಲ್ಲ ಆಡಿ ಮಾಸ ಟೈಪ್ ಆಕ್ಚುಲಿ up to 50% conditions apply at enter Apollo. All the gifts which you provided are mutual funds investments at which market risk at the very so all our opinions are based on our knowledge and interpretation of it, but we'll be very, very happy. I'm sure Srini, Ravi and Vitesh also will definitely, whatever questions they give it to us, we can give our views and hopefully you can find some time for that. Thank you for once again taking your time on a weekday on a Friday evening to come at 4 o'clock and participate throughout the 1 hour and 15 minutes. I thank you all. Saranya, I just over to you for the concluding remarks if you have. So I, from my side, have concluded. Thank you, panelists. Thank you, all participants. Over to you, Saranya. So, any final comments, Srini, Ravi, Nitesh? Just final one word.
Thank you for this opportunity to share our experience. Hopefully, some kind of circular and clarification comes from the department.
Thank you,
sir. Thank you. Thanks everyone for giving this opportunity to share some ideas.
Thank you, sir. Thank you, CV.
Thank you.
Giving us an opportunity.
Yeah.
Thank you.
Saranya, over to you, Saranya. So,
Yes, sir. Thank you all the speakers for this informative session. I request all the participants, if you have any queries or anything, you just ask, or otherwise you just mail it to SECI office. So we'll forward it to the concerned persons and we'll revert back.
thank you.
Chairman will close the session or how?
Yeah. We can. Thank you.
Yes, sir. Thank you.
all.
Thank you so
Thank
much.
you.
Thank you.